Well, the Australian Chamber of Commerce and Industry has now heard from both the Treasurer, Josh Frydenberg, and Shadow Treasurer, Jim Chalmers, about the way they would shape this year's and future federal budgets. Today, Jim Chalmers said if elected, Labor will bring down a second budget this year. Now, if there's one thing in common, both sides of politics agree that the way to shrink the national debt, now approaching $1.1 trillion, is to grow the economy faster and not to cut government spending. Joining me now is a man who's hosted both of these finance ministers, Andrew McKellar, the Chief Executive of the Australian Chamber of Commerce and Industries. Andrew, many thanks for your time. Look, it's a simple thing. How does either side of politics drive the economy to grow faster without also driving up the rate of inflation at the same time?
Well, great to be with you, Ross. Indeed, it's an important question. And I think here, undoubtedly, the answer is there's got to be a focus on the supply side of the economy. The two major pressure points that the economy is facing at the moment, the two constraints on growth. On the one hand, we're seeing enormous pressures in supply chains. If you go back to the mid-1970s to the oil shocks that occurred then, we haven't seen supply side pressures, supply chain pressures to the same extent over almost 50 years. So that's very significant. We've got to address that. The other area is in the labour market, and there's acute skills shortages in many, many sectors. Again, the worst we've seen in several decades. So we've got to address those 2 points. If we're going to take the brakes off economic growth, we've got to drive productivity. That's where the focus of fiscal policy has got to be next week and beyond.
Well, OK, both of them sort of talked about this and addressed it, but if there is inflation, there's also going to be wage demand. So how do employers, your members, temper the workers' demands when right now real wages are going backwards, demonstrably going backwards?
Well, I think it's inevitable. We are going to see some increased pressure on wages. At the moment, we have headline inflation running at 3.5%. We've got the wage price index at about 2.3%. Wages are not fundamentally contributing to inflationary pressures at the moment. We've got to be careful that we don't get into that situation where that becomes a problem. So I think there's a little bit of flexibility there. But fundamentally, what we've got to ensure is that if we're going to have real wage increases, it's driven by productivity growth. That's the only way it can be sustained. And again, to do that, we've got to invest in those productivity enhancing improvements. And then again, that's where fiscal policy's got to be maintained.
But OK, but this is something is that productivity has gone backwards over the past decade, not forwards. And so really one of the real hindrances to making productivity improvement is politics itself, it's government. You can't get agreement about how you drive that productivity forward. Do you get any sense that there is a joint ambition to have productivity go forward without the political rhetoric that inevitably comes?
Look, it's one of the great challenges, and I think from a business standpoint, we really are urging both sides of politics to focus on this in the upcoming election campaign. There are some clear areas where we think they can start to set some of these priorities. So investing in skills, investing in vocational education and training, that's something we'll be looking for next week. Encouraging business to invest more, that's going to boost productivity. So I think over the medium term, cutting things like company tax rate, putting in place further strengthening measures for business investment, that will help us to expand those supply side measures. That's something that we've got to see in the budget. But there's got to be a really ambitious reform agenda. The onus is there on the major political parties to bring some of these ideas forward in the federal election campaign, really set some targets for how we're going to grow the economy over the next 3 years and beyond, over the coming decades. And I think that's where we've got to see some of that vision coming back from the major parties.
But you're right here, because all the money in the world from government is not going to really create the acceleration in the economic growth that the government needs if it's actually to keep this debt under control. So it's up to your members, all employers, to keep their foot on the expansionary pedal. The question is whether the policies are in place to allow and give confidence for businesses to do that, to employ more people, to really try and build more plant machinery, to invest in new technology and new innovation in this country.
Well, I think one of the concerns we do have is that there is some weakness in business investment at the moment. Many of the economic fundamentals are quite strong, but we do need to really pump the accelerator, get business investment going. You know, we've had the immediate asset write-off arrangements in place now over the past couple of years. They have been very helpful, I think, in encouraging equipment investment in particular.
Just jumping in there as well, a second one is actually carry forward losses and basically being able to write it off against, you know, sort of previous income, which I think, again, was a great innovation. Now, it meant that, of course, people were prepared to go and have a crack, and maybe if they lost, they'd actually, from previous taxes they've paid, be able to claw some of that back.
Yeah, look, absolutely. I think those have been very positive things. So we can't step back on that. I think we've got to keep those measures in place. Expanding the reduction in the company tax rate to 25%. We've got that in place for small businesses now, businesses with turnover up to $50 million a year. I think we've got to take that up to the next notch, take that up to the threshold of about $250 million a year, and that will cover, you know, small and medium-sized businesses, perhaps not bigger businesses at this point. But those things are very important if we're going to get the balance right in the economy, if we're going to encourage growth for the future. Then I think those are a couple of important measures that we've got to look at.